They filed for bankruptcy, and this fits into a larger trend that you've reported on of companies going under within the past year. So why are we seeing this pattern?
Yeah, so I think honestly, if you're looking at the highest profile bankruptcies, I mean, you're looking at really, I would say WeWork and FTX are probably the two main ones. FTX and a lot of the other crypto related ones. We saw Celsius, Voyager, Silvergate Capital, which is a bank that was very exposed to crypto. And with that, that's probably not necessarily a pattern of the wider trend. I mean, again,
And was that more of a domino effect? Because was FTX
yeah,
like the main one, and then it just fell from
yeah,
there?
and I mean, I think if you're looking, like, I think if I were to say, I mean, the probably the most worrisome bankruptcy in terms of the wider, shift in monetary policy was Silicon Valley Bank and the banking collapse in March. We saw that was pretty contained. There wasn't some big domino effect, but there is some speculation that we could see a lot of companies, probably more akin to WeWork, where it's companies that are banking on high growth without having a very healthy balance sheet in the current moment. And through the first 9 months, this was the busiest year for corporate bankruptcies since 2020. And it was just narrowly behind 2020. And before that was 2010. So since the Great Recession. So it's definitely a pattern. But I think, again, you're going to see investors be it's not, we're not quite in that recession, but I think people are being cautious, and you're okay. Like, I want to be in solidly healthy companies. I mean, we've seen, like, with WeWork and SVB, or, well, FTX wasn't publicly traded, was once valued at $32 billion, is that, the reminder that stocks can go to zero. And so I think, again, it's that more than anything else of maybe, following that common thread of, is this one bankruptcy, are there going to be other, maybe like real estate bankruptcies or something like that? I think it's more so that it's like, oh wow, like, we can't be in these like zombie companies that are burning through cash so quickly.
And is there a correlation between high interest rates? Can we blame the bankruptcies on that too?
Yeah, I mean, I think it's definitely a factor. Again, I think with WeWork, it's kind of, with WeWork and some other companies, it's like, a bad company's a bad company. But I think, and especially when if you're looking at the wider trend, yeah, I mean, there's definitely a strong correlation. And especially companies like WeWork that are focused on higher growth. If you're trying to grow, you're going to be taking on more debt to, build out, different products or, buildings. And then when rates are more expensive, interest payments become more expensive. That's directly coming out of the bottom line. So yeah, I mean, you're going to see like there totally are the trickle down effects from higher rates, and it'll be certainly interesting to see. I mean, we've seen the economy stay resilient overall, and especially the stock market. But I mean, that's one of the top things. I mean, it's just, if you're paying more, I mean, think of from a personal perspective, if you're paying for a car loan, it's now 9% instead of 2%. It's like, and then if you're trying to balance your checkbook at the end of the month, and it's like, oh wait, like, now I have to pay $800 for the car instead of, $600. Like, it's just, it becomes, higher rates do put another added stress on companies that did not need another stressor.